So I've just discovered a particular phenomenon and I want to share with you guys. This is going to blow your mind because this is something that happens in the Forex market every day. And you might just as well just capitalize on this, and this will help you to protect your positions or to make a lot of money in Forex trading. What's up guys, and welcome back to my channel. My name is Ndemazeah, Godlove, and on this channel we speak everything on trading, business, personal finance, and tips to help you stay profitable on a consistent basis. So if this is your first time watching me, or you've been watching and you've not subscribed, make sure you smash that red subscribe button below to subscribe to the channel so that you are always updated anytime I come up with awesome content like this. So like I said, I'm just going to be going straight into the video to share this particular phenomenon with you guys so that you can be able to start incorporating it into your trading, because this is something which I have been using for years and I think, okay, I have to share it with you guys now. So let me just show you guys something really quick, then from there I'll be able to deduce and explain why that happened and how you can use that to your advantage. If you can see here, this is on trading view. Most of the time I just use MetaTrader 5 for all my trading. The other time I'll use trading view is just for tools like this that I won't find on MetaTrader 5. Besides that, I use MetaTrader 5 for all my trading, right? On trading view, I'll be able to tell you the name of this indicator, don't worry. On trading view, you can see this indicator is showing us the market session. So you don't need to go and be typing what time is the London session starting, what time is the New York session starting. No, once you put this indicator, it shows you the market sessions as soon as they are started, even up to when they are finishing. And even the overlaps, you can even see the market sessions overlap, right? So here, you can see here it says the Tokyo. If I have to zoom in, you can see here it says the New York session, the London session, Tokyo. So let's just zoom out to this section. You can see it says the Tokyo session, it says the London session, and the New York session. Meaning the Tokyo session started somewhere here at around 2 a.m. my time, and it finishes at around 10 a.m. my time. While the London session starts at 9 a.m. my time. This is going to show according to my time zone. Your time zone is going to show, it's going to be different, but you have the same chart. Then London session starts at 9 a.m. right up to about 17 o'clock my time, or right up to 18 o'clock my time. While the New York session starts at 3 o'clock my time, right up to 11 p.m. my time. But look at something which is very, very interesting. This is going to blow your mind. See, at the start of this market session, what do you notice? The market has been going down. Just look at this. The market has been going down the whole of this, the whole of the London session. The overall trend on the Tokyo session was what? What was the overall trend on the Tokyo session? It was a downtrend. You can see this was throughout the Tokyo session, the overall market trend was a downtrend. And at the start of the London session, what do you notice? The market immediately shoots up. Can you notice this? The market immediately shoots up. It becomes an uptrend. Just immediately at the start of the London session, the market reverses. That is not all. That is about the London session, right? Let me show you guys something now about the New York session too. The same thing, New York session, just the same thing. Let me zoom this in and show you guys the same thing. This is going to blow your mind. This happens all the time. Even today, as you backtest today, you're going to see the same thing. Okay, you can see this is New York. This is the New York session. And on the New York session, what do you notice? What do you notice? Throughout the London session, you can see the overall trend, the market was ranging, and the overall before the New York session. This is the New York session that started here. The overall was what? It was a downtrend. And at the start of the New York session, just the first candle after the start of the New York session, what do you notice? Boom, the market shoot up immediately. Can you see this? So at the start of every major market session, there's a high probability or a 95% chance that the market is going to be reversing. So what are some of the reasons? Let me even explain what are some of the reasons, because you should be able to know what happens in the Forex market. This is not just gambling. That's why trading is different from gambling, because you are informed, you know exactly what is happening. So what exactly happens here for the market to be able to reverse at the start of every major market session? So before I even go into those points, the indicator, you just come to your trading view, you go on indicator, just click on indicator and search this indicator. It's called market session by Leviathan. All right, market sessions by Leviathan. That is the indicator that will be able to show you these market sessions according to times where they are starting and they are ending. Good. So why do you have something like this? Let's start with the first point on our list, which is profit taking. All right, profit taking. You need to be able to understand that at the start of every new major market session, there were people who were trading on the previous market session. So most of them, they tend to take their profit. They tend to take their profit as soon as we are approaching a major market session. So that tends to now lower liquidity that reverses the direction of the market. So the first point is profit taking. And the second point where the market tends to reverses at the start of every major market session is due to new market participants. You guys need to understand that at the start of every major market session, like the London session, the New York session, the Tokyo session, there are many traders or many big traders like the hedge funds that only trade during these market sessions. So at the start of the new market session comes in with the start of new market participants. So because of the start of this market, new market participants coming in with a lot of liquidity pool, it tends most of the time to change the direction of the market. Then with that, now it moves us to the next point, which is just liquidity. You need to be able to understand that new market sessions comes with different levels of liquidity, and most of the time, if the liquidity on the previous market session is higher than the liquidity on the the liquidity on the current market session is higher than the liquidity on the previous market session, it tends to absorb. So the previous liquidity would tend to absorb the liquidity which was on the previous market session, causing the market to change the direction. That is the third thing. Then the fourth thing is just news releases. You guys can see the time here is actually, this is 3 o'clock, and most news events, this is 3 p.m. my time, South African time, and most news events used to be released at this same time. So most of the time, what this is gold, SAU USD. So what that particular day, there was a particular major news event on gold or on the United States dollar, and that news event was negative. The news event was negative. Since this is SAU USD, you expect this chart to go up. All right, so that will still change the direction of the market. So another thing that can also change the direction of the market at the start of a major market session is economic releases. All right, then let's go to point number 5, why you'll be able to see something like this, the market changing direction at the start of every new market session. Point number 5 is just psychology. Trading, just psychology. Many traders already know that, okay, this is a phenomenon that always occurs in the market all the times, where the market tends to change, tends to reverse the original direction from the previous session at the start of another session. So they reposition themselves and they are ready to get in as soon as that new session starts. So because of that psychological shift in the market, it used to happen like that. They used to say your words are powerful. It's the same thing. It used to happen most of the times like, okay, since they are predicting that to happen, psychologically they've already repositioned themselves to take advantage of that opportunity, and you actually see the original trend reversing. Then the last point on our list why you tend to see the market reversing the direction or reversing the direction as soon as we get to a new market session is institutional trading. All right, institutional trading. Most big institutions, and this happened most of the time during the London and the New York session, because the big banks, the Wells Fargo, the Bank of America, the Citibank, the big hedge funds like the Soros funds, the Paul Walker hedge fund, most of these hedge funds, most of these big banks, they participate during these major market sessions. So with their entry into these particular market sessions and their participations at the beginning of these market sessions, it tends to also reverse the direction of the market. So these are the 6 key points that tends to cause the market to reverse its direction at the start of every major market session. So now, since you've already known the theory and the phenomenon that usually occurs in the forex market, how can you use this to your advantage? This is what you can do. This should be able to help you first. Point number 1, to protect your positions. All right, point number 1, to protect your positions. Meaning, if you are already in this particular trade, let's just say, okay, taking this example, if you are already in this particular trade and you know the London session is going to be open at this point in time, then if you were actually on a sell trade, then you would have protected yourself. Maybe you would have instead put your stop loss, you would have already put your stop loss somewhere up here, because you know, okay, there's a high probability that this market might be reversing. So you would have already repositioned yourself and put your stop loss somewhere here. So at the start of every major market session, I want you to go to the 4-hour time frame or the higher time frame, 4-hour time frame preferably, because this is the 5-minute time frame, right? So you go to the 4-hour time frame preferably, and you determine the overall trend. What is the overall trend? You guys already know. If the market, where is my pen? Let's just go this. If the market is bouncing on what? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. That is an uptrend. And if the market is bouncing on what? On lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. That is a downtrend. So you go on the higher time frame and check if you can see something like this, and you also check if you can see something occurring like this. If you confirm on the higher time frame, using this our case as an example, if you confirm on the higher time frame that the market is in an uptrend, then at the start of the new market session, you take a buy trade. As simple as that. At the start of a new market session, if you've already confirmed that the overall trend on the higher time frame, like the 4-hour time frame, is on an uptrend, then at the start of the market session, you should take a trade in that same direction, which should be opposite to the trend. So if the trend prior, if the trend from the previous trend moving into the current trend is opposite to the trend on the higher time frame, then at the start of the new market session, you take the trade on the direction of the trend on the higher time frame. As easy as that. You can see this is still the London session, and this one there was a small shift, but you can see the overall trend before the London session was what? Was an uptrend. And London session, what do you see? You see the market dropping immediately. So let's just say the overall market trend on the higher time frame on Great Britain Pound USD was a downtrend. Then you would have instead taken a sell trade at the start of the London session. Maybe you always go for a risk to reward of 1:2. So your stop loss would have gone up there, take profit down here. You would have been safe even if the market would have consolidated against you. So this one, you would have taken a sell trade at the start of the London session if the overall trend on the 4-hour time frame was a sell trend or was a downtrend. The same thing on Great Britain Pound USD. If the overall trend on the higher time frame is an uptrend where you actually see something like this, higher lows, higher highs, higher lows, higher highs, then at the start of the London session, you take a trade somewhere. You just come here. This is where you enter into this particular trade. So if we take our measurement tool, let's just go here. Where is that measurement tool or the short tool? Long position. Let's just come here. We put our long position. You would have entered into that particular trade somewhere here. You put your stop loss there, and you can even go for a risk to reward of, let's just say, a risk to reward of 1:3. 1:3 here, and boom. Within 30 minutes or so, within an hour, you would have already been out of this trade. So you would have been risking almost about, let's just say, you would have been risking about 21 pips or about 21 pips to go for almost about 60 something pips. That's the risk to reward of 1:3, and you would have already been out of the trade. So that's still another simple strategy that you can use at the open of every market session. The rule is simple. You go to the higher time frame and you determine the direction of the market. If the direction of the market on the higher time frame is contrary or is inversely proportional to the direction of the market on the market session prior to the current market session, which is about to open, then you open a new trade in the direction of the trend on the higher time frame. So that is the rule. And it doesn't mean this is going to happen most of the time, but sometimes the reason why you have these strategies, people used to say, no, Godlove, how do you have so many strategies? But no, it's because I'm prepared in any market situation. I have strategies that, okay, if I open my chart today and there's a news event, I will use my news trading strategies. If I open my chart and I see that, okay, there's a good trading opportunity, the market from the higher time frame is aligning with my trend on the lower time frame, I'm going to come in with a strategy like this to still place a trade. If I open my chart and I see a particular trend which there's beginning to be a pullback, I'm going to come in with my trend trading strategies and I'll make so I have strategy because I'm prepared for every market situation. I used to always say, trade what you see, not what you want the market to show you. Very simple. Trade what you see, not what you want the market to show you. But some people come into the market with their once a day, they so stereotype, they already have in their mind that this is what I'm going to be doing, but the market is going to do its own thing, irrespective of how you've planned. The market is going to do what it has to do. The market doesn't care about you. So you just follow the flow. You trade what you see, not what you want the market to show you. So go back and backtest this particular phenomenon / strategy, and let me know in the comment section if you have any question about this particular strategy or phenomenon. If you want to use my recommended broker, my recommended prop firms, or join my free Telegram community, then check out the link on the video description. Then talking about my free Telegram community, I recently launched my VIP community where you'll be getting about 3 to 5 signals every day directly from me. People used to say, okay, we want to be able to earn while we learn. Why can't you just give us some of your signals? So yes, we have a VIP community where with that VIP community you can get 3 to 5 of my trading signals every day. So join my free Telegram community, and on the free Telegram community you guys will be able to see the link to join the VIP with a monthly subscription so that you can be part of the billionaires who are making money on a daily basis. Check out this video, which was a video I made explaining a strategy similar to this. Also check out this video, which is a playlist which has all these videos. Check out this particular link to subscribe to the channel, and I'll see you guys on these other videos. Peace.